Hello traders. So last weekend I was not able to upload the weekly outlook because I was having some audio issues which I could not resolve on time. So I decided that within the week I would post an update. Alright. So looking at what happened through last week, we had some trades. We had some trades last week from here, right, from here down and all of that. So first of all, we had this zone on the daily time frame. We had that zone on the daily time frame. This is it. This zone on the daily time frame, and it happened immediately after these multiple highs were taken out, and you could easily call that a break of structure because yes, it's a proper break with the body, but then again it went ahead to test a supply zone and then started dropping. You can see this huge fair value gap on a different chart. You will see this as a gap. Let's just take a look at FXCM charts. You will see that as a gap. You can see. So that's a weekly gap, and I said that the gap also acts as fair value gap. All right, those weekly opening gap also acts as fair value gap. So price most likely will come for it. All right, that's just it. And we are looking at seeing if price is gonna come down there, but we were able to trade to sell last week down to these points. And how did we even make those entries? I will not be able to share everything, but I will just share the successful entries. We had 4 entries, 2 were successful, and we were able to end with 8% profits last week. So on the 4-hour time frame, what happened was that price tested this zone, all right, after this displacement. So we had price at this zone, and then we had our entry. You can see where we had our entry from was around here, all right. That entry was actually made with the 3-hour time frame. Right, on the 3-hour time frame, we had a mitigation block entry, right? And you can also see your key level. For those that knows key level, you can also see your key level, which was perfectly printed. All right, mitigation block entry was like a sniper. So that was it. And then we had about a 1 to 4 risks to reward. Stop loss was just above here, right here, and then we had about a 1 to 4 risks to reward. All right, so this was it, and then we had about a 1 to 4 risks to reward. The target was just around here, something like that. So yeah, and as we were coming down, we also had another entry, a sell. I couldn't call that sell publicly, so because it happened late in the night or something. And you know, this is USDJPY, so at night the market still moves based on time zone, the Asia session. All right, so that was pretty much it. And then we got to this place. We took 1 loss here, and that was it. So now what's causing price to revert? What's causing price to revert? I was actually looking at this key level. This was the reason why that we took 1 loss there. All right, I was looking at it. I thought that price was going to take it out because we are actually moving into this zone. So I had a shift on the lower time frame, but then it wasn't successful. So that was the loss. So now price is now reacting back up, and we only have 1 zone here. If that zone is taken out, then we'll be fully bullish on this price. So looking at this, going back to the 3-hour time frame, what I'm looking at, this chart is not clean enough. So let me just remove all of this, because I was initially I was initially looking at this zone, this key level, to hold price, but couldn't hold price. All right, and then we broke, and I was like, okay, if we break to that side, because we have this zone, this is an order block, right? Because we have that order block there, still very valid. So I was expecting that this is the last zone. If price is able to take out this zone, then we'll be fully bullish, right? Otherwise, when we look at this on the 1 hour time frame, we would have discovered that price, it's most likely already in the bull side of things, right? Because we broke this, not only that we broke that high, we also took out this high. Most people would say, okay, why not we start buying? Now the funny thing there is that sometimes you don't just change structure or change direction because of internal structures. There can be external structures that will supersede those areas, which is like context. Having context as to what you are doing. If you traded the moment price broke this high yesterday, if you traded, you would have gotten a good buy, all right, up to this point, all right. So you'd have gotten a good buy there, and there's also a buy here which I also entered, but took out a break even, because you could see how price came back. All right, so I was actually trying to buy into this zone, but I took out a break even. So because of that, I decided that, okay, no problem, price is actually weak, the market is actually weak. So what's the best thing for me to do now is to wait and see if price is going to take out that other block. In fact, the best thing to use here is the box. So if price is going to take out this other block, right? If price takes out this other block, then bounces back, then we get an entry for a buy. So for now, I'm looking at it to hold. Why? It's really, really very good entry zone, because if you look at it here, you could see that this other block actually filled up an imbalance. Not only that, it cleared some liquidities. All right, there's a liquidity sweep right here on the 1 hour time frame. On the 1 hour time frame, you can see it clearly, that liquidities, and then here it's not just showing an imbalance, showing you a key level, which is a very strong supply. All right, price drops from there, there's an inducement, all right, inducement, then a break. So you can see the break, then a break here. Sorry, we have a break here. So that's pretty much what's going on here. So what do you have? You have sweep into a supply, then you have a break, you have inducement. What's that? SBI. So, and this is a valid supply. There's fair value gap, there's this other block that sweep liquidity, and there's inducement. And now what is happening here is that price also did an inducement, or you could have called it engineered liquidity here. All right, so somebody will say, but internally we are looking bullish already, because this disruption high is already out. Yes, disruption high can be out, and yet would still, will still go back into the original direction. All right, it's all about context. So because we are seeing this zone now, if you want to really be so certain and so sure about your direction, you could have been buying from here. That's why I was able to start buying from here. All right, the moment this place was taken out, I was able to start buying to exit from here. All right, but nonetheless, price actually came to take me out at break even, because I bought with the lower time frame. It was supposed to be about a 1 to 4 extra reward, right? But I woke up and saw that I was taking out that break even. So, and I decided to just let it get to where it's going. So now once price gets to this zone, all right, we are not going to enter immediately. We are going to wait because this is a decision zone. Let price do whatever it wants to do. And if price wants to break through it, if it breaks through it, we get a continuation and then we continue buying. All right, the continuation will look most likely like this. When you see something like this, you can see this was a proper break. All right, it was a proper break, and they created this key level here, and you could see how price came back for the key level. That's most likely how it's going to look like. All right, and when there's a proper break and a proper key level, one can get an entry. You can enter directly or use a lower time frame to reduce your SL and increase your reward, right? Something like that. And there was one zone that price also provided here. So yeah, but you may not really see it clearly, but a very clean setup was this key level here, and price actually came to respect it. Just that I had an entry with a lower time frame. Stop loss was around somewhere here, but I got out at break even because price had already gone 1 to 2 point something before it got dark, and then this morning I saw price as taking out the entry at break even. So so that was just it. So that was it. So it depends on you how you take your trade. Look at the entry here. It's quite very interesting. So this was the entry here, and the stop loss was just below here, right? And you could see price had actually gone far. It actually was a 1 to 6 risk to reward, and price had actually gone far. So I intended to hold it, but yeah, this was even an additional entry. Right, I also entered it. I also had an additional entry, right? But yeah, the market will always be the market. So, and because of this sluggishness, that's why I knew that price is not ready to actually go bullish. Price is still seeking to go below. Yes, price is still seeking to come down here. And with all of these things that's happening, the best thing to do is to wait for price. Alright? So wait for price. When price continues down, then you find an entry to sell. I would advise that you remain with a continuation entry. Alright? Don't try to enter straight from here. There'll possibly be a lot of struggle around here. So if price decides to drop from there, it will drop faster. Alright, once it begins to drop, your continuation entry, please. So that's just it. Don't be in a hurry. Being in a hurry can actually make you lose some money. Okay, and being in a hurry is like wrong timing. Yes, you are correct that the market is gonna go down, but then your timing can be wrong. Okay, so the next thing that we're going to be looking at is GBPUSD. I'm not trading GBPUSD this week, but let's look at it. Now you can see what's happening on GBPUSD. I actually did not trade it, but I've been setting orders and following it. Just paper trading. I only trade one pair because of capital preservation and maximizing reward. Okay, so now last week the projection they made sense anyway. So this week price started this was a very good zone though, but it did not respect, so that would have been a stop loss if I had traded it. All right, so what made me to look at that zone actually was we have this demand zone, and price came, swept liquidity. All right, swept liquidity, and then we had inducement. Let's go to a lower time frame. Then we had a good level of inducement. All right, so we had the inducements here, and then we had the break of structure. So this was a shift of structure actually, and not a break. So and yeah, I think apparently it's because that's not a break. So even if I was using SBI says break and not shift, so you have to wait for a break. So there was no break actually. Probably that's why that did not hold. Okay, there was no break or structure. You should know the difference between a break and a shift. So this was actually a shift. You could have used a shift to make entry though, but price didn't come back for it immediately, creating an SBI, but did not break. So it's not an SBI actually. It might look like it, but it's not it. Okay, so yeah, let's go. What are we now looking at currently? This is looking somehow. We already know where price is coming from and where we might be going. To. Clean up all this rubbish. There's a lot of rubbish here. Okay. What's happening here now? We have this zone now. We have this zone I told us is supply, and price tend to respect it. I was looking at this to be the zone where price is gonna come to, right? But there's lots of supply here that price is actually tending to respect. This is daily time frame, higher time frame. I told us about the higher time frame doesn't put into consideration anything like inducement. All right, so but I was expecting that okay, maybe price is gonna break through this zone to get to this zone. All right, but then again, only a 4-hour time frame, I think that's where price is showing something. So okay, on the 4-hour time frame, there's no really something reasonable that I could have used, except on the 1 hour. This zone actually, okay, this is kind of a proper supply, and then we had a sweep of liquidity, multiple structures around here, multiple liquidities to be taken around here. So that's kind of confirm why price is dropping hard, right? Now what is the structure for this? Believe in me, I'm just opening this since on Monday. I've not opened this guy. So what's the current structure for this? What I'm looking at is that from a daily time frame perspective, this is actually bearish. So from a daily time frame perspective, this zone may no longer be strong enough, right? From a daily time frame perspective, it has already respected it and moved forward. Even though this is an order block, yes, that's quite alright. That's one of the major reasons why this guy is rejecting. But this order block doesn't look like it's strong enough to push price back. But nonetheless, in the immediate time, if I wanted to take advantage of this pair, what I'll be looking out for would be to take advantage of this around here. There's a key level I'm seeing here, proper key level. Okay, so seeing something like a good mitigation block and a key level at the same time. So looking at this place, this is a key level. Right, this is a key level, but that key level is quite far away. So I will look for the key level that is closest, maybe the 1 hour time frame. Okay, this is 1 hour time frame. All right, so now what I would possibly be looking forward to is I'll be looking forward to see how price reacts before it gets to this zone, and noting the fact that this place is far away from here. If price is going to hold here, I want price to tend to respect this guy by engineering some form of liquidity before coming to this zone before I will engage. All right, nonetheless, if you are so unsure, you have to still wait until price prints something reasonable for you to trade. There are other pairs to trade. All right, there are other pairs to trade. So otherwise, if you want to buy, wait for price to take out this high first. All right, if price takes out this high, then you can buy. Then if price decides to respect this zone and start dropping, wait for it to take out this low and then drop. So that's just it. It's patience. Now, what's happening here is that we are going to be looking at XAUUSD. XAUUSD. I've not opened it since Monday, honestly. I have not. And I don't even know price has become like this. So looking at this, I would like to go to daily time frame and see where price tends to. Oh my god, the zone I wanted price to come to before I'll start looking out for the market on gold. This is where it is already. Okay, this is beautiful. So what next? Since we already know where price has come to this key level there, we have proper imbalance there. So what we are going to be looking out for, let me see, 4 hour time frame. All right, this is looking good. So if I want to engage, I would like to see price take out this high. So I will see a shift, proper shift, because we did not even engineer liquidity. So I'll see a proper shift, know that price has continued up. Otherwise, I will not engage. Right? I will not engage. I'll wait for price to take out this high. Then I start with a continuation. Alright? And my first target would most probably be this zone where we have a key level there. Closer key level. Sorry. I think I have a closer key level here. Alright, so that's just it. So I would prefer to see price take out this, and you can see this would most probably be a key level or just a flip zone for us, and then you can trade it and take it up. So that's just it. It's a matter of waiting. All the pairs are asking us to wait. BTCUSD. So for BTCUSD, for me, okay, it's kind of respecting a zone I've drawn. Like I said, BTCUSD is ready for the all-time high, for any all-time high. So what's happening is that, like I told us last week it was here, I told us that price will not start going up there, that we still need to clear these lows. All right, enter into this particular demand. You can see that this is an SBI sweep, break, inducement, and then we have what engineered liquidity around here, and price is respecting that. So how do we take advantage of this market? So price actually created multiple zones here. Let's use 1 hour time frame. You can see how price is respecting those zones. So I wanted to see a shift first before, even if I wanted to engage, and price did a proper shift. All right, engineered liquidity left this zone open. This is more like a 3 hour zone. I think it was cleaner in the 3 hour time frame. Yeah, it was cleaner key level. You can see it very well. Right, it was a cleaner key level there, and then someone can still call it a mitigation block, but yeah, it's cleaner killer, but you can see how price came for it. And there was a proper engineered liquidity around. That's why I drew out this zone. Right, on the 1 hour time frame, there was actually a zone that price tended to react from initially before dropping. I think, where is that zone? If I can find it. Okay, this was the zone. This just a mitigation block zone. All right, but why did price not respect it? Because according to order flow, this guy did not sweep this low. Could have swept this low and picked current from this zone in order to continue flowing. So this is just an engineered liquidity. So the source was not strong. So that's why. So if you, before you wanted to even enter this trade, normally if I wanted to take this zone, I would have to go to a lower time frame to confirm a proper shift. If this was a liquidity that price was engineering to use, then I'll confirm it on a lower time frame. For that reason, you could not confirm it and price dropped, which is good. And as it dropped, it didn't even drop into the zone and spiked. No problem. After that, it still came back to the zone. So if you had this zone and you had a pending order based on the fact that this actually tapped current, right, then from this demand, then you could have had stop loss here, and based on this, could have wanted to take this trade. But I don't like taking trade like this anymore. So now the best thing I would do, since price is already here, is what again? To wait, let price shift. Right, once it shifts, we use a continuation model to do what? To keep going up. As price creates more model, we keep using them, and this is fantastic because price already has liquidity, so we'll start going up from here. And even if you check, this place is out and this place is also out. So while inducement is out, disruption is also out. So we are ready to go up. So I think from this time forth, all you need to do is keep going up, up, up. And if you're looking at how I mark this, I treated this part in the book where fair value gap turns to a flip. That was what price used to drop into the